Welcome to Inside India. I'm Amit Singh on this Monday, and these are your headlines. India's Nifty 50 is on track to open higher this morning following broad gains across Asia and US markets. Foreign investors buying into the India trade again after a long period of net selling. India reportedly on track to clinch a trade deal with New Zealand. Agriculture, jobs and investment all on the table. More details due today. And global prices soaring amid rising Fed cut bets. The yellow metal scaling a fresh record high after rising over 60% in 2025. All right, let's start by giving you a sense of how the APAC markets are looking. They're climbing even as investors digest China's central bank decision to keep its 1-year and 5-year loan prime rates unchanged at 3 and 3.5% respectively. Take a look at what you're seeing on your screens. You're seeing the Nikkei at 50,480, almost up 2%, and the Kospi, the tech-heavy Kospi, 1.86% up. TAIEX also 1.67%. It's a green carpet right here. Remember, the markets are really also digesting completely over the weekend after the Bank of Japan raised its policy rate by 25 basis points to 0.75%. That was a 3-decade high. This follows the U.S. markets also rising a second day on Friday. The leader in the pack, remember, was Oracle, jumping 6.6% after TikTok agreed to sell its U.S. operations. The AI trade seemingly regaining some momentum, and that's why you're seeing this bounce back in APAC. All right. What about the Indian markets? They come online in about 45 minutes. Here's what GIFT Nifty futures are indicating at this point in time. We are looking at a bit of a jump. We're looking at the line of 26,000 being crossed, 26,189. That's what GIFT Nifty futures is indicating. Remember, the market will try to break away from that 3 consecutive weeks of losses, and it's possible because foreign funds are coming back. More than 200 million USD came back on Friday, and India's traders will see their sentiment reflected after minutes of the central bank's December policy meeting also showed that there is more space for interest rate cuts. And all of this is because there are signs of moderate economic growth in the next year. All right. And Friday, it saw a big debut in the markets. Shares of ICICI Prudential Asset Management, it jumped 23% on their market debut, valuing India's second largest fund house at about $14.4 billion. And the shares ended the day nearly 20% higher than their issue price. The listing makes it the country's most valuable listed asset manager, overtaking rivals HDFC and Nippon Life India AMC. The strong debut follows a $1.2 billion IPO that was heavily oversubscribed. ICICI Prudential AMC manages assets worth around $111 billion and is a joint venture between ICICI Bank and UK-based Prudential. And the market will also be impacted by some 11 IPOs this week in India. That's why we are reflecting on India's IPO market in 2025 and what's coming in 2026. In terms of proceeds, let's bring that up. India ranking third after the US and Hong Kong at 22 billion in terms of volumes. And India was number 1 in terms of the number of IPOs that actually took place. That was 367. That's the biggest number. But what you're seeing on your screens right now is proceeds. Look at the US, it's at 45.5, Hong Kong at about 34.9, and India almost touching 23. And this is a data that's come in just, well, in the last couple of days. So we could see some changes towards the end of the year. But take a look at the second page. That's where it gets interesting, because in terms of volumes is where India is way ahead at 367, number 1 in the world this year, and even last year, really. But the US at 223. And if you combine China and Hong Kong, then they are just very close at 219 to the US. That's where it gets interesting. But in terms of the proceeds, that's where India is lacking. And that's a big question that we are going to try to get answers to. And that's why we have with us a very special guest, Akash Agrawal. He is the Associate Director at Anand Rathi Investment Banking. Akash, thanks so much for joining us. I think that's where we get started, right? What is 2026 going to look like? And why is it that India is not going to catch up necessarily on proceeds? Can you give us a sense of that and give us numbers, exact numbers? How many IPOs, how much money will be raised? Come on.
Thanks, Amutoj. Thanks for having me. I think before we get into really the India IPO opportunity, what we obviously know is that the capital markets essentially follow the macroeconomic story, right? So India is one of the very few economies in the world that's growing at a very healthy rate consistently. We've been growing at 7 to 8%. In fact, just a tidbit here. While we contribute 7% to the world's GDP, we're actually contributing about 16, 17% to its GDP growth. And that really is a testament to the kind of growth that we're going to see over the coming years. And that's really why we're seeing all the action that we're seeing in our IPO markets. India has also been largely absorbent to geopolitical turbulence, primarily because a large part of our economy is actually based on domestic consumption, about 60% of our GDP. So we're seeing massive capex. We're seeing a lot of economic action happening everywhere. So quite bullish on the IPO story. In fact, from the IPO lens, if you see over the last 4 years, we've consistently had an increase in the number of IPOs. So in 2022, we had about 39 main board IPOs. 23, that went up to about 57. The year after that, about 91. And this year, we're seeing about 102 IPOs. So we've seen categorically a consistent increase in IPOs. In fact, even as we speak today, 74 DRHPs have been approved by the Securities and Exchange Board of India, and about 120 more are in the filing process or therein. So we're going to see a lot of activity happen in the IPO markets consistently. And of course, there is a significant participation happening from domestic and retail investors as well, and we hope that continues.
All right. Fascinating intake. All right, I want to just start by also diving a little bit into which companies are you really looking forward to in 2026? Because we know that the likes of PhonePe, Zepto, Reliance Jio, they're saying could potentially be the largest ever in India's IPO history. Give us a sense of what you're looking forward to, what are your concerns, and where you think the headlines will actually be focused.
So you're absolutely right. In the last few years, we've seen really this technology landscape and the consumer landscape in India take off. India has conventionally been more BFSI and manufacturing focused. But now what we're seeing is more secular growth across the IPOs. So before I dive into what IPOs are really coming up, let me give you a small insight into India's digital story. Right? We all know that India is a massively fast digitizing nation. In fact, currently, only about 5% of our GDP of 4 trillion, that means about 200 billion, comes from digital contribution. When you look at China and the US, China is at about 40% and the United States is at about 60%. So if you look at our GDP growth of about 7 to 8%, and if we're getting to that 8 trillion odd figure in the next 7 to 10 years, we can look at an easy digital contribution of $3 trillion coming from such companies. And that's a massive opportunity. That's a 15x growth from where we are today. So from that perspective, we've seen a plethora of IPOs that have come into the market, and happy to say that most of them have done pretty well. In fact, just about 12 days back, we had the Meesho IPO. Meesho is a fascinating story because it's probably the only country in the world where the e-commerce model has worked in a different scale and a different level of scale, and with a lot of different nuances to what the Amazons of the world have worked. So Meesho, which IPO'd about on December 10th, actually went up about 45-50% on listing day and is now up 100%. So we're seeing a lot of participation, not just from the FIs, but also from retail investors in IPOs like Meesho, IPOs like Grow. So we're quite confident about the digital and technology-centric IPOs that are coming up in the future.
Yeah, just to provide a counter perspective, the fact is that there are other IPOs that have not worked as well. We can talk about WeWork India, we can talk about Lenskart. But you talked about the ones in the last couple of weeks, and I understand the context there. The other point to note out here is that around half of the 350 plus IPOs that have debuted this year are trading below their offer price. What do you have to say about that?
So Amitoj, I think if you look at India, especially over the last 10 years, you'll see this consistent CAGR in the markets of about 12 to 13%. So as we know, markets go through various phases. And especially when it comes to these technology IPOs, you'll find that the Indian retail investor and other investors took a little bit of time to understand the markets. In fact, even when Zomato debuted about 4 years back, 3 to 4 years back, you saw the listing price go up 60% on listing day and then come down significantly. And now it's trading at 3x of its issue price. So we're going to continue to see this understanding of the nuances of Indian markets play out. In fact, if you look at Lenskart, right? So Lenskart is one of those companies in India which is very different because it's not just a consumer company. It's actually a technology and consumer company which has 40% of its revenue contribution coming from the international markets. So Indian investors will take time to understand that, and we remain quite positive on the macro story as far as consumer and technology and other IPOs are concerned.
That's an interesting point that they're still getting oriented almost, the Indian domestic traders to the IPO market, to the Indian market. But the question really is, can retail investors, who a lot of times they use leveraged capital, continue to withstand these kind of losses at the cost of these existing shareholders getting lucrative exits? That's the primary question on the mind of those who are the smart investors.
You're absolutely right. I think we know that IPOs really are about predictability and performance and pricing, right? So those are the three P's of an IPO. As far as the Indian investor goes, we have a lot of new investors and incumbent retail investors who are coming into the markets. And, the proof is in the pudding, right? Proof of the pudding is in the eating. So you're seeing SIP inflows at record high. You're seeing about 3 to 4 million demat accounts open on a monthly basis. So the Indian investor has understood that this is not just a one-way street. There's going to be some bumps along the way, but as long as the macroeconomic story and the consumption story of India remains intact, we're quite positive that we'll see continued participation.
Is it possible that there's an alternate scenario where they are just doing what is known as herd mentality? Everyone's investing, get into SIPs. There's this sentiment that's actually come into the Indian market that, hey, let's just start investing every month, and that is overshadowing anything else. Most of the investment advisors are saying, hey, do long-term investments, put your money in, and forget about it. And that could be a problem. Couldn't that be a problem?
I mean, it all really stems again from where we see the country going, getting to that 10 trillion or GDP number in the next 12 to 13 years. And there's an underlying growth in the equity capital markets that will follow that. So I think from that perspective, investors who are investing for the long, in fact, let me just point out to a couple of IPOs that took place about 4 to 5 years back, right? Mazgaon Dock and Shipyard Builders essentially has gone up 3,000% since listing. And we've had many other IPOs like Paras Defense. So we're not just talking about the consumer and tech play, but many IPOs across. So the growth has been secular and these companies have gone up significantly. So while we might see some turbulence when it comes to listing day gains or maybe therein a month or so after, overall the story remains intact and we're quite confident that the investors will make money.
Also, I mean, just to add to your point, and I'd love you to jump in with more perspective. Regulators' survey, SEBI's survey itself reflects that less than 10% of Indian households have invested in securities markets. Give us a sense of where that could go in 2026.
I think that number will consistently keep going up because we're seeing that trend follow, right? We had literally half the demat accounts if you look about 4 to 5 years back. And that number has grown at that consistent pace. So we're going to see a lot of participation coming from various parts of the Indian sort of population. It's not just going to be limited to people who have a lot of capital, but also people who are looking at participating in the growth story overall.
Okay, wonderful. Let's also get a sense of your perspective on the value, the amount of money, the proceeds that are going to be raised in 2026, because we have seen Goldman Sachs and JP Morgan and Kotak give similar numbers of about 25 billion that they believe will be raised in 2026. That's going to be about 10 to 14% up from 2025. It's another record year on the cards. What are the risks that you foresee, that you're talking to your investors about, to traders about? Give me a sense of that.
So you're absolutely right. So we hope to continue seeing those. In fact, in the last 8 months itself, we've had about 84 listings, right? And about 70% of them have traded above on listing day. So I think if you look at it from that perspective, we're going to see that continued increase in the markets. However, what we always tell our investors and sort of traders is that, and investors in particular, is that do remember that the markets are going to go through short-term turbulence every now and then, especially in the geopolitical climate that we are in. However, India remains largely resistant to such shocks. We believe that there is a significant domestic consumption story and a massive growth story ahead of us. And if you're a believer in the country and in our economy, I think you're going to make significant amounts of capital, or at least compound your capital well.
I'm interested in the concerns around e-commerce and anything related to that in the market, IPO or otherwise. One of the concerns is that there's just too much money being put in and it cannot be sustained. The other one And this is quite interesting. I find this very interesting. There was an Instagram reel of a particular, person who delivers for one of these platforms to people, right? And he said that I worked 15 hours and I only made some 700 Indian rupees, right? That's basically 10 Singapore dollar. We're talking about 10 Singapore dollar. Now that's a concern. That's a concern that you're having these people who are part of the working class who are not making enough money while these valuations and are just going haywire. Give us a sense of how this is sustainable.
India is at this point of time, I wouldn't say one of the higher per capita GDP countries, but we're getting there. There is in some cases, a slow and steady progress, and in some cases, a very rapid evolution that's happening. And we're going to continue to see that. To sort of answer your question around the entire e-commerce space, I think what people have now understood is that, we're a land of nuances, right? So wherein, again, I point to the Meesho example, wherein, and you have that on your screen, so wherein we saw Amazon's and the Flipkart business model in e-commerce burn lots of capital to get to a certain level. You've seen Meesho come in and within a span of 10 years become heavily profitable, cash flow generating, and in fact proven a business model that has not existed anywhere in the world. So when we talk about India in particular, we're going to have to look at it from a very different lens and understand that our problems and our solutions are very localized. And that makes the opportunity set also quite significant. In fact, if you talk about the Eternals, which is Zomato and Blinkit and other such companies, there was a lot of question around the viability of these business models. But now on a consistent basis, the food delivery vertical has been throwing out cash on a quarterly basis. And the online grocery vertical is scaling very well. So you're going to continue seeing investment in growth. You're going to continue seeing some verticals become profitable. And then again, I come back to the kind of business models that will work over here, which are very different to those which have worked across the world. And that's what makes us much more interesting and the opportunity set very large.
What's your take, and that's the final question, on institutional investors versus retail investors, the level of participation that you see coming in 2026? Generally speaking, we've seen that retail investors are unstoppable. Where do you see this entire conversation going?
Amitoj, institutional investors are more of anchors, and retail investors add depth to the market, right? So if you talk about the retail investor perspective, I pointed out the number of millions of demat accounts opening every month. So we're going to continue seeing that trend. As far as the FII capital inflow goes, we're very positive that this will come back and come back very, very strongly, especially as we see some geopolitical issues and conversations moving towards resolution. So we're quite positive that the FII's inflows will come in and the retail investor will also continue to back the Indian markets.
Okay, I have to ask you very quickly, Akash, because everything you've said sounds extremely optimistic. You're very positive, and this is a fractured world. There are a lot of uncertainties. Is there anything that gives you pause about your positivity?
I think the Indian markets, while we've actually, the good thing is the markets have become secular, right? So we've actually opened up to a lot of different kinds of industry sectors and business models like technology, consumer and such. But what remains to be, what we must be cautious of is that we really understand all of these business models as we invest in them. And these companies consistently deliver quarter on quarter of predictable profits and performance. And I think that's what's going to be key. And from that lens, what gives us confidence is that our balance sheets are healthy. Our GDP ratios are at all-time lows. Our debt ratios are all-time lows. So from that perspective, healthy corporate balance sheets, low debt, good future growth story, and good, strong participation from all kinds of investors. So we remain quite positive, but of course, performance and predictability is absolutely key.
All right. Thanks so much for that. That was Akash Agrawal from Anand Rathi Investment Banking. Appreciate it. Now, speaking of IPOs, it's not just India seeing record numbers. Companies in Hong Kong have raised over 36 billion this year, more than India, making it the world's top IPO spot this year. CNBC's Emily Tan explores those numbers in this report.
From battery makers to bubble tea and even autonomous vehicles, Hong Kong's IPO market came roaring to life in 2025 to claim the top spot on the global ladder, overtaking both the Nasdaq and New York Stock Exchange, as well as last year's IPO darling, India. With more than $34 billion raised, over 100 new companies struck the gong on listing day at the Hong Kong Exchange. And spirits are high.
If you look at the IPO returns on a weighted average basis, the returns are close to 50%. So overall, there has been a happy meal for everyone in this market.
That momentum is set to continue.
We're sitting on a pipeline of more than 300 companies right now, and that pipeline is still building. And so at our current pace of reviews and listings, that's going to take 2 to 3 years to digest.
Fueled by a rush of Chinese companies looking to raise capital, dual share listings have been the mainstay of debuts in Hong Kong this year, as China continues to promote the Hong Kong Exchange.
I think the regulator in mainland China is more incentivized to encourage good companies to be publicly listed here in Hong Kong.
Long the gold standard market due to its deep pool of capital, the United States has recently been losing its luster for Chinese listings. Geopolitical tensions between Washington and Beijing, as well as China's own self-sufficiency drive, have been prompting many Chinese firms to look closer to home when going public. While an increasingly polarized world is seeing Chinese ambitions to challenge the U.S. when it comes to capital markets.
We probably are entering into a phase of a G2 world where you have China and U.S. I think China aspires to become an equal or closer counterpart to U.S. Hong Kong X sits in the middle of this.
For the Hong Kong Exchange, while it says it is a connector between China and the rest of the world, it also is trying to diversify its listings, targeting Southeast Asia and Middle Eastern companies. A listing of Saudi Arabia's Aramco has been highly anticipated ever since dual Saudi listings were given the tick of approval back in 2023. And even Hong Kong X CEO Bonnie Chan says they're working on it.
For the IPOs that we've been talking about since the beginning of the year, Middle Eastern investors have been prominently featured as cornerstone investors or otherwise. We've yet to do a dual listing of an issuer, and we're working on it.
But for now, investors appear content as the surge of Chinese companies boosting Hong Kong's markets shows no sign of slowing in the new year. Emily Tan, CNBC, Hong Kong.
I want to show you how gold is trading as well. The precious metal resuming its rally, hitting yet another record high this morning. Even silver at a record at the gold, obviously at 43.90 at this point in time, up about 1.20, and silver at 68.69. But remember, discounts in India have widened, though, as the bullion is not seeing a huge demand despite the wedding season. And that's mostly thanks to these rising prices. Silver also seeing these sharp gains. Have a look. It's quite wild, right? Inside India is taking a short break. We'll be back in 2 minutes. Welcome back. You're watching Inside India. Some of the stories that we're keeping tabs on, let's take you through those. Reports say the U.S. Coast Guard is pursuing an oil tanker in international waters near Venezuela. U.S. officials say the vessel is part of Venezuela's so-called dark fleet, accused of evading sanctions and operating under a false flag. The tanker has not been boarded and authorities have not disclosed its exact location. The U.S. has already seized 2 such tankers, making this America's 3rd such operation in about 2 weeks. The move follows President Donald Trump's recent announcement of a blockade on sanctioned tankers entering or leaving Venezuela as Washington ramps up pressure on the country. We're also watching the U.S. Special Envoy Steve Witkoff. He's sounding positive about peace talks held in Miami over the weekend, calling them a quote, productive and constructive. Officials from Europe, Ukraine and the US have been discussing 20-point plan aimed at ending the war between Russia and Ukraine. The Russian president's special envoy met with US officials before the talks and will be heading back to Moscow today to discuss the outcome. But so far, Russia sounded unsatisfied, saying prospects for peace have not materially improved. Also, a Japanese regional assembly today is expected to vote in favor of reopening the world's largest nuclear power plant in the Niigata prefecture. Kashiwazaki Kariwa was one of over 50 nuclear reactors that were shut down in 2011 in the wake of the Fukushima disaster. The country has since been pivoting back to nuclear energy. Prime Minister Sanae Takaichi has been a major advocate for nuclear restarts to strengthen energy security and to wean Japan off imported fossil fuels, which account for up to 70% of the country's electricity generation. Coming up, we will take a look at how digital public infrastructure is building up in India. Stay tuned. Welcome back. You're watching Inside India. CNBC TV 18 in India is reporting that India and New Zealand could sign a free trade agreement. Today, the talks started earlier this year in March after a 10-year halt, and New Zealand is seeking greater access for dairy, fruit, wool, and wine, while India wants easier movement for skilled professionals and improved market access for its IT services. And that's keeping in mind the fact that there have been protests in New Zealand just a couple of days ago regarding Indian immigrants. Now, India has stepped up trade negotiations this year following punitive US tariffs. The target was to also ink a deal with the EU by the end of this year, with just 8 days left now. The agreement has reportedly still not reached a conclusive stage yet, and this is not unusual. Indian Foreign Minister S. Jaishankar met with his Dutch counterpart in New Delhi on Friday. Jaishankar said India is counting on Netherlands' support to move the EU agreement forward.
Today, as we meet, we will recognize that a number of important agreements have been reached in the last few months, which have added more dimensions to our cooperation. We also count on your support as we are moving to what I hope is a decisive phase in our negotiations with the European Union on the free trade agreement.
Meantime, China has filed a complaint at the World Trade Organization against India, challenging New Delhi's tariffs on information and communications technology, products and subsidies for solar manufacturers. Beijing says the measures give Indian firms an unfair advantage, they harm Chinese interests and violate WTO rules, urging India to withdraw what it calls discriminatory practices. We are also counting down to the market open in India. This is how we are shaping up. Just about 14 minutes to go before the market opens. GIFT Nifty futures indicating that it's going to be at about 26,196, up from that 26,000 barrier where Nifty 50 has been stuck for the last couple of weeks. 25,966 is where it closed on Friday. Remember, we're watching very closely how the rupee is compared to the dollar. It has been quite an interesting story where the rupee hit a new low. It's the worst performing currency in Asia the last couple of months. And what we know at this point in time is that there have been at least 2 interventions from the RBI, according to reports. And whether it continues to do so or not, can it sustain that, is the question. At this point in time, reports indicating that we could see weakening of the Indian rupee. Meantime, minutes of the RBI's December policy meeting are out, and the market will in fact be digesting that. What do the minutes really reflect? The central bank has a signal scope for further interest rate cuts as inflation remains subdued by growth, but growth faces pressure from higher US tariffs. The RBI rate cuts by 25 basis points to 5.25%, taking total cuts this year to 125 basis points. Now, that is interesting because this is the sharpest easing since 2019, and Governor Sanjay Malhotra, he said real interest rates need to be lower while retaining a neutral stance allows flexibility as conditions evolve. Retail inflation, what did it stand at? It was at just 0.71% in November, giving policymakers that space to ease further if price pressures stay soft. The RBI does expect inflation to average under that 3% mark in the March quarter, even as the government pushes reforms to support growth and attract investment. Now, India's net direct tax collection rose 8% year-on-year to 17 trillion rupees, or around $188 billion from April to December 17th. Gross direct tax collections were up over 4% than the same period last year. And direct tax collections primarily include corporate tax and income tax. New Delhi has set a direct tax collection target of over 25 trillion rupees for the financial year ending March, and the government says it is confident of meeting that goal. India cut personal income taxes in February to support consumer spending, a move the Modi government hopes will reduce tax receipts by about 1 trillion rupees. And the country has also rapidly digitized its tax collection and registration systems. Every taxpayer needs something called a PAN card for their filings. And today, we're talking to the company that developed and facilitates not just this, but also various other digital public infrastructure solutions. We're talking to Suresh Sethi. He is the CEO and Managing Director at Protean eGov Technology. Suresh, it's a pleasure to have you joining us from Mumbai. I appreciate this. I think the entire digital stack of India has been the talk of the, well, not town, the world. And I think that's where we'll start. We want to just understand how you're at the forefront of that digital transformation, because it's difficult to keep track of everything that's happening. There's insurance, there is ONDC, there's agri-stack, there's health, there's education, and it's not just India that you're focusing on. So just paint a picture for us.
Yeah, sure, Amitav. Thanks a lot, and great to be here. I think India's digital public infrastructure has been built over decades with a lot of sustained policy and institutional efforts coming behind it. Today, it is, I would say, no longer experimental. Over here, we are clearly seeing digital public infrastructure being as important as national highways, telecom networks, or power grids. And I think what really set the ball rolling for us was our foundational digital public infrastructure, the creation of a national ID. I think that is at the heart of everything, where people can prove who they are. And then moving on to how I move my money, the payments architecture and infrastructure that was put into place. And then looking at how data can be shared in a contextual manner with people understanding what they can use data, which was more about data empowerment coming into the hands of the consumers. I think the foundational rails are what really have set it. And as you rightly mentioned, we started our journey way back by probably issuing the nation's first digitally verifiable ID, which was the PAN card, which primarily is your tax-related ID. And that has been at the center of a lot of work done in the taxation front in terms of reconciliation, giving you the ability and the institutional ability to see the taxes collected and reconciled. And I think what we are seeing today is that built on the foundational layers of DPI, as you rightly called out, we are now looking at sectoral, expansion. So while at the heart of it, you're looking at identity and payments being the thrust, but as you move into multiple sectors, you are looking at verifiable and programmable registries getting created. ONDC can talk about buyers and sellers. Insurance is a completely new sector where we are again building the digital rails to bring all insurance intermediaries together. And that has been a journey, but clearly it is well beyond, just technology getting built. Equally important is the fact that it gets seeded and has institutional stewardship to take it forward.
Okay. I also want to just point to the current status of PAN. That PAN card that we're talking about, the key card, which is used for income tax collections, both institutionally and for individuals. There's a major milestone that you have gone ahead with. Now, it's key because you have this reputation associated with PAN. But at the end of the day, in March, that was taken away from you. And you can throw some light on why you think that happened. You didn't win that contract. And that actually saw your shares crash quite a lot, by 50%. We'll bring up that to reflect year-to-date what happened. And LTI Mindtree won that particular mandate by the government of India for PAN 2.0, which is, I know that you support that. You're in for that. I understand that. But I think it's also important to shine a light on why that happened. Is it because the Indian government recognizes that there is a potential for monopolization? Because the fact is that in some cases, you have a lot of monopolizations. I'm going to quote just the fact that you mentioned this in your company's earnings call, that Protean continues to hold, for example, a dominant market share of 98% of the total pension subscriber. That's quite a number. So just give us a bit of context to what happened this year with PAN 2.0 and your shares.
Sure, let me contextualize it, Amitabh. I think, first of all, PAN 2.0 is the Income Tax Department's initiative looking at revamping the tech stack where the PAN number is allocated. Now, naturally, you can imagine when you have, today we are talking about 900 million records over there. Every time a person applies for a PAN card, there is a deduplication, algorithms are run, you are making sure that there is no fraud because it's a national identity. So that is the tech stack which we as an organization don't manage even as we speak today. The mandate that we got from the tax department way back in 2003 was all about issuance. So if we cut back to 2003, we are talking about a country where naturally the mobile penetration, the usage of digital devices was no longer what it is today. So Protean as an organization established a national network. Today we have almost 400,000 points of service across the country where people can come and apply for a PAN card. and provide their KYC. And our job was to take a digitally verifiable KYC data to IT department to issue allot the PAN number, and then we would print the card and issue it back to the citizens. So that mandate remains with us. This was just one more RFP which came into play, and this was about revamping the tech stack through which the allocation is done, and that is where it's always a 0-1. We at the same time won a very strong RFP, another national ID stack, which is the CERSAI KYC, where we are revamping the CKYC stack for the government of India. So I think these are wins which happen and losses which happen. So there is no sort of change in the mandate we have, and we continue to do the PAN card issuance for the nation.
Okay, fascinating. This request for proposal, in your last earnings call, you mentioned that it was an active situation. There were 3 major RFPs, requests for proposals. The Bima Sugam about insurance. The second one you just mentioned, CERSAI, which was a central registry of securitization, asset reconstruction, and security interest, just for our viewers. And obviously the third one is Aadhaar Seva Kendra. Can you just, with CERSAI, you've won that, you've already said that, but for the other 2, what's the vision for the next year? What's happening?
So I think as we started our conversation, today Protean has expanded well beyond, we started our journey with taxation, you rightly said, then pension, where we have built the, digital backbone of the pension ecosystem as a central record-keeping agency. And then we are doing a lot of work on foundational identity stack, being the only company which runs all 4 facets of identity. This is India's move to take digital rails to multiple sectors. And insurance is one sector where Bima Sugam is going to play a very, very instrumental role in creating programmable registries where you can actually, link information and run it on digital rails. India's DPI rails have always been about government-seeded infrastructure. Along with it, you allow the market to innovate on top by building applications, and then you are having a very strong regulatory oversight. So I think directionally, that is where Bima Sugam is going. Aadhaar Seva Kendra, again, it's again, I was mentioning, India still is a market where you need assisted digital guidance. So Aadhaar Seva Kendra are the step where the government has again taken a very strong initiative to build centers of excellence where the national identity can be issued. You can come in for biometric or demographic changes to these centers. And these are going to be centers of excellence which provide all services related to Aadhaar. And we've again won a mandate to deploy this, network across 188 districts in the country. So we continue to work very strongly with the government on these various facets of building the digital public infrastructure. And again, proud to say we are the only company which are today involved in issuing 2 national IDs, the PAN card and the Aadhaar card, now with the Aadhaar Seva Kendra mandate.
No, that is quite interesting. And I just want to ask you very simply, people would say there's a monopolization problem. What's your comment on that?
Not at all, because ultimately we are working with the government to lay out the digital rails. How DPI is consumed today, the entire architecture that Government of India has adopted is about the rails, and then it opens it up to market for innovation. So whatever digital rails are getting laid is today being, supported by a lot of private and public sector innovation, which builds on top of it. You take our UPI rails. While UPI rails are today managed by NPCI as an institution, on top of it today, you have both public, private sector players, big tech building applications, and that is what is the success of the payments DPI in India. So a lot of the institutional work we do at a digital rail level naturally has to be done by entities which work with the government to lay out the rails. But India has created a very open model of open interoperable networks on which all private sector innovation can happen on top. So we don't see it as a concentration risk over there.
I want to talk to you about the Open Network for Digital Commerce, the acronym for which is now quite well used in India. It's ubiquitous. That is the UNDC. It's a government initiative to create that open interoperable e-commerce network where anyone can buy or sell online, not just through these big platforms like Amazon. And it's been waiting to kind of take off. It's not, the retail push hasn't really been great, particularly for MSMEs. What's the problem there? What's going on? And what's the future?
So, Mitoj, one part is the technology, the entire framework of unbundling the buyer and the seller side and creating an open democratic access to digital rails for digital commerce was the mission. So from a technology perspective, there is a lot of fine tuning which has been done. And when I talk about fine tuning, you clearly also want to give the MSME the ability to plug in a very seamless and frictionless manner. Because you're talking about a huge swath of MSCs which are sitting in the tier 5, tier 6 cities, and you want to give them democratic access across. So I think the rails have been placed, and it's more about adoption. This is a multi-layered journey as you're bringing buyers and sellers together in an unbundled manner, with buyers and sellers both plugging into digital rails so that they can discover each other. I think we've solved for discoverability. We need to put in more efforts to bring about the institutional or the comprehensive consumer trust in terms of how do you ensure that your goods are reaching you, your goods are satisfactory to your satisfaction, and that has always been the challenge or the building blocks of digital commerce. Where whenever we are purchasing digitally, we want to be ensured that we are putting our money in the right space and getting the right goods. So ONDC has put a lot of governance, lot of guardrails on this. So as I said earlier, the digital rails and tech is only one part. It is all about then building consumer trust, which I think is very important. And today, ONDC is seeing clearly green shoots over there. We've expanded across the country. We are penetrating deep. And I think that is where the journey is taking us forward. But clearly, it's on a growth trajectory.
Okay, very quickly, if it's on a growth trajectory, when do you see this, being a success story? Because there's a concern that this will fade into the background.
No, we clearly see some areas in which the needle has definitely moved. We are talking about areas like mobility and transport, where you are consuming a ride and there is no goods and services getting delivered, and we are seeing very good uptake over there. It's probably one of the widest or more comprehensive transport and mobility ecosystem, and that has got created through ONDC. We are seeing some good stakes in hyperlocal. So there are areas ONDC is focusing in going deeper and penetrating into these markets, and we'll have to wait and see how it grows from there.
As I understand, you've been maintaining a consistent, presence or focus from a geographic perspective on areas like in Africa, obviously Southeast Asia and the Middle East. And you are also working on an education-related DPI project in Morocco, alongside another project in Ethiopia, where the Prime Minister was just a couple of days ago. There is also things that you've actually announced at the Global FinTech Fest last year. One is in the quantum safe data vault, area, and the other is in the AI in a box solution. Geographically and what's coming next, just give us a sense of that.
So geographically, clearly the focus is on taking DPI to countries who are at different stages of evolution. We very clearly recognize the fact that it's not a one-shoe-fits-all. What works for India may not work for another country. And that is where we've introduced the concept of DPI in a box. So primarily what we are looking at is India's DPI architecture is clearly built on composability and interoperability. By that, what I mean is you have various digital public goods which you bring together and solve for different sectors. So that gives us the ability to adapt to a country's legal, institutional, and cultural context. And we are therefore able to, say, go to a Brazil and talk about democratizing commerce. We go to another country and talk about building the foundational rails of identity, very, very much like Aadhaar. So DPI in a box is something which we have fine-tuned, and that gives us the ability to lay out POCs in a matter of months, rather than taking years to put the proof of concept on the ground and provide value to the citizens. So that is the approach we are taking. Africa, Middle East, Southeast Asia are markets where we clearly see, there is, again, as we mentioned, Global South is an area where we want to take the DPIs and see how we can create interventions over there. So that is definitely the next frontier for us, and some early successes in rolling out the DPI in a box, as you mentioned. And other than that, clearly, I think AI is the big thing. Whether it is, one is You rightly called out the two things which we launched at GFF. AI in a box, because we do believe that AI will play a very strong role in making DPI consumable and adoptable. So I think going forward, AI will have to be built at the core and not bolted on later to digital public infrastructure. And clearly we are seeing, multilingual interfaces, fraud detection, your ability for decision support, predictive and analytics. So these are things we are embedding into whatever stacks we are building now. So that is going to be critical. And quantum is definitely the future where you want to bring that, and we are doing some pilots on that.
Okay, fascinating. Very quickly, final question. India's slightly behind. It has guidelines on AI, but it doesn't have the rules laid out through Parliament. You've been shaping policy discussions to conversations on data privacy, cybersecurity, consumer protection, many things. There are concerns around that. There are concerns about poor data governance. There are concerns around privacy. How do you comment about that? How is that going to be addressed?
So I think very critically, India's DPDP Act, where we've now also laid out the guardrails on how data should be shared, how purpose is driven, how the citizens get the ability to share data, have control over data, revoke it. So I think that those are going to be very strong guardrails coming into play. On the AI front, Amitoj, I would just add that since India has laid out the digital rails, India can very clearly be the AI use case capital. And that is where it becomes very critical. The explainability of the AI models, everything comes into play. And there is strong focus on ensuring that that alignment is in place as we roll it out at a citizen-centric and population scale level.
Okay. Thank you so much. That was Suresh Sethi from Protean eGov Technologies, really the flag bearers of India's entire movement in terms of PAN and Aadhaar, digital identity and digital public infrastructure. Thanks so much for that. That was Suresh Sethi. All right, we are going to be moving on and giving you a sense of what's happening as the Indian markets join the trading day. We'll take a look at some movers in Mumbai after a short break. Welcome back. The Indian markets have come online. The Nifty 50 is looking good. It was just below 26,000. It's gone up and it's broken that barrier that it's been below, that 26,000 barrier. It's been below that for a couple of days, 3 weeks of consecutive losses actually for the Indian market. That seems to be breaking now at this point in time. It's still early in the day. That's what is happening. Nifty 50, the traders reading into the sentiment that's come from two particular points. One, the central bank in India revealing its monetary policy committee minutes. That meeting, what happened there and what they're indicating effectively is that there will be more rate cuts potentially in the coming year. And second, foreign investors seem to be coming back. The US dollar to the Indian rupee, that's an interesting situation. It's flat at the moment, but for the last 2 days, there's been reports of intervention from the central bank, and that's what's bringing back the Indian rupee at this point in time. Remember, it had hit almost 91 plus. That was a big low for the Indian rupee. But now let's just keep going and give you a sense of some of the other shares that we're actually tracking. We're tracking Shri Ram Finance. Japan's MUFG is set to buy a 20% stake in this Indian firm for $4.4 billion, marking the largest cross-border investment in India's financial sector. Now, Shri Ram Finance says the deal will strengthen its balance sheet, lower funding costs, and support long-term growth. At this point in time, it's up 2.40. And a quick look also at the Mumbai-listed shares of Infosys, trading in the company's New York listed address, was halted after the stock jumped as much as 40% on Friday's open, briefly adding tens of billions of dollars to the IT major's market value. Analysts said such sharp swings are highly unusual for a widely traded stock like Infosys. The company later said there was no unusual activity requiring disclosure under Indian market regulations. At this point in time, the stock is up 5.5% almost. Now, that's all the time we have today on Inside India. Keep watching CNBC. Access Middle East is up next. Don't go anywhere.